I'm a CPA, national best-selling author, and I've audited deals worth over $100 million. And these movie scenes, they're not entertainment, they're documentaries. From illegal Swiss banking to housing that destroyed America, I'm about to show you how this really works. Starting with this margin call scene that actually happened to somebody I know.
Jesus. Wow, that's gorgeous. It's a long way down.
Yes, it is.
Whoa, don't do that, come on.
You know, the feeling that people experience when they stand on the edge like this isn't a fear of falling. It's a fear that they might jump.
Well, that's very deep and depressing, thank you.
Yeah, well, I'm a little dark sometimes.
Well, that's extremely odd to start this video off.
All right, well, come down, please, Will, please, come on.
Will? Yeah, fuck it. Woo! Not today! It looks like they're gonna make us dump this shit.
What?
You watch.
How?
You'll see.
How could they do that?
They can't. It's impossible, but they'll figure a way. I've been at this company for 10 years, and I've seen things you wouldn't believe. When all is said and done, they do not lose money. They don't mind if everybody else does, but they don't lose.
Will, did you really make $2.5 million last year?
Sure.
How did you spend it all?
Goes quite quickly. You know, you learn to spend what's in your pocket.
$2.5 million goes quickly?
All right, let's see. So the tax man takes half up front, so you're left with 1 1/4.
He's not lying. It actually could go quickly, especially if you have no general sense of how to use money. And so what I always talk to people about is more income isn't actually going to help you. You have to have a systematic approach to win with money. And when you have a system working for you, that would take care of everything else around you. And if you don't, you're going to be SOL no matter how much money you make. And most people's issues aren't more income. Most people's issues are a systematic approach so they don't have anxiety, stress, or nerves around money, which is most of what you're feeling.
My mortgage takes another 300 grand. I sent 150 home for my parents, you know, keep them going. So what's that?
800?
All right, 800. Spent 150 on a car, about 75 on restaurants, probably 50 on clothes. I put 400 away for a rainy day.
That's smart.
Yeah, as it turns out, because it looks like the storm's coming.
Still got 125.
Actually, that's not smart, but I'm going to digress.
Yeah, well, I did spend $76,520 on hookers, booze, and dances, but mainly hookers.
76.5?
I was a little shocked initially,
Well, I'd have to argue that's probably not a good use of your money, hookers and booze.
but then I realized I could claim most of it back as entertainment. It's true. Holy damn! The cavalry's here!
The thing is, it's not about how much money you make, it's what you keep. And the way that you become financially free is taking a large portion of that income and saving it and investing it so that long term you don't rely on the income any longer. And if you get to that point and you do make additional income, you can theoretically waste it just like he did and be totally fine, which is pretty interesting.
Let me repeat this again. A huge deep sea exploration play off the coast of Equatorial Guinea. That's an oil field that's barely been touched. Remember, the stock's trading roughly 31% off the 52-week high, and it's part owned and funded by none other than guess who? Churchill Schwartz. So we know they won't let anything too bad happen here. My suggestion is that we get aggressive. Agreed?
Yeah.
We all agree? Ed, what do you think? Well, I don't agree.
This is where Wall Street loses. They're group thinking based on somebody in a suit saying something and everybody else goes with it. But let's see what happens next.
Well, I don't agree. Maybe it's just me. Equatorial Guinea's a pretty tough dictatorship. These guys had already nationalized the gold, the diamond mines.
So what's your point?
I just don't think it's a risk our debt should be taking right now, that's all. I'd wait.
Wait?
Yeah.
Wait for what? Your beam me up Scotty hydrogen fusion deal?
Well, now you're talking about something else. United Fusion Corporation, Stan. Come on, it's apples and oranges.
Oh, really?
Yeah.
You mean the deal that we already sank $50 million into, Mr. Brainiac?
Alternative energy is what biotech was 15 years ago, Stan. Come on, you were young once. You know that. Profits are not quarterly. The runs could be huge.
We'll all be dead by the time your nutty professor mixes any money.
Like this coming from the guy who said Google was a bubble.
Anyway, Hydra offshore. It's priced right for us to make 3 to 5 times on our money. And better yet, what we all love the most, big year-end bonuses.
Most of Wall Street grows on greed, and a lot of times greed gets you in a bad situation, which is what we typically see with huge bubbles. And this is just another example of how the industry can crash right before your eyes. All right, let's look at the next video.
A cologne?
No.
Opportunity.
No. Money.
Okay.
I smell money.
Okay.
Chris. God damn it.
Sorry.
This is your basic mortgage bond. All right? The originals were simple. They were just thousands of AAA mortgages bundled together, guaranteed by the US government. The modern ones are different. They're private, and they're made up of layers of tranches. The highest level AAAs getting paid first, the lowest rated Bs getting paid last, taking on defaults first. Now, obviously, if you're buying Bs, you can make more money, but they're a little risky.
Most individuals look for the reward and they assess the risk, but they don't actually internalize what type of risk they're taking on when they go for higher return assets.
They're a little risky. Sometimes they fail. Chris? Somewhere along the line, these Bs and double Bs went from a little risky to dog shit. Where's the trash?
Behind you.
I'm talking rock bottom FICO scores. No income verification. Adjustable rates, dog shit. The default rates are already up from 1% to 4%, fellas. And if they rise to 8%, and they will, a lot of these triple Bs are going to 0 too. And that, you're too close, is an opportunity.
Okay, you're saying that at 8% the bonds fail, and we are already at 4%?
That's right.
If they go to 8, it's Armageddon.
Yeah, that's right.
How come nobody's talking about this?
You're completely sure of the math.
Look at him. That's my quant.
You're what?
My quantitative. My math specialist. Look at him. You notice anything different about him? Look at his face.
That's pretty racist.
Look at his eyes. I'll give you a hint. His name's Yang. He won a national math competition in China. He doesn't even speak English. Yeah, I'm sure of the math.
Actually, my name's Jiang, and I do speak English. Jared likes to say I don't because he thinks it makes me seem more authentic. And I got second in that national math competition.
So you're offering us a chance to short this pile of blocks? How?
With something called a credit default swap. It's like insurance on the bond, and if it goes bust, you can make 10 to 1, even 20 to 1 return, and it's already slowly going bust.
10 to
One of my old clients at Deloitte did a credit default swap, and that was an interesting story.
Slowly going bust.
10 to 1, 20 to 1. Oh, wait.
And no one's paying attention. No one is paying attention because the banks are too busy getting paid obscene fees to sell these bonds.
But wait, you are the bank. I mean, you work for the bank. I bet your margins are pretty nice and fat.
Let's not talk about my margins, by the way. Being nice and fat. That's a nice shirt. Do they make it for men?
Aren't you the bank?
I work for the bank. I don't think like a bank. Big bank, small bank, I like to make money. All right? Let me put it this way. I'm standing in front of a burning house, and I'm offering you fire insurance on it.
How can these underlying bonds be as bad as you say? It wouldn't be legal.
Nobody knows what's in them. Nobody knows what's in the bonds. I've seen some that are...
This is what's crazy about the financial industry. You know, you hear all these experts doing all this like fancy stuff and using fancy terms, but the reality is, like he just mentioned, a lot of these guys are just going on greed and realizing profits are more enticing, and therefore they continue to go down this greed rabbit hole, and they don't even know what they're selling or what's in these assets, and it actually ends up crushing them, which is what leads to a lot of bad times.
65% AAA rated, that I know for a fact are filled with 95% subprime shit with FICOs below 550.
Get the fuck out of here.
You want me to really blow your mind? When the market deems a bond too risky to buy, what do you think we do with it? Take a guess.
I don't know, you tell me.
All right. You think we just warehouse it on the books? No. We just repackage it with a bunch of other shit that didn't sell and put it into a CDO.
A CDO.
Yes, a CDO.
What is that?
This is where we take a bunch of Bs, double Bs, and triple Bs that haven't sold, and we put them in a pile. And when the pile gets large enough, the whole thing is suddenly considered diversified. And then the whores at the rating agency give it a 92, 93% AAA rating. No questions asked.
Say that again.
A collateralized debt obligation. It's important to understand because it's what allowed a housing crisis to become a nationwide economic disaster. Here's world-famous chef Anthony Bourdain to explain.
Okay, I'm a chef on a Sunday afternoon, setting the menu at a big restaurant. I ordered my fish on Friday, which is the mortgage bond that Michael Burry shorted. But some of the fresh fish doesn't sell. I don't know why. Maybe it just came out halibut has the intelligence of a dolphin. So what am I going to do? Throw all this unsold fish, which is the triple B level of the bond, in the garbage and take the loss? No way. Being the crafty and morally onerous chef that I am, whatever crappy levels of the bond I don't sell, I throw into a seafood stew. See, it's not old fish. It's a whole new thing. And the best part is they're eating 3-day-old halibut. That is a CDO.
Well, I just need to know how these could possibly be correlated.
So when you have questions about different financial products and you can't get a straight answer, use that as your red flag.
The Explorer, and you're the first person who has found this thing.
Hold on. So mortgage bonds are dog shit. CDOs are dog shit wrapped in cat shit.
Yeah, that's right.
Okay.
Yeah.
Institutions treat these CDOs like they're as solid as treasury bonds, and they're going to zero.
No, it can't be right. There were $500 billion in housing bonds sold last year alone. The ratings agencies, the banks, the fucking government. You're saying they're all asleep at the wheel?
Yeah. My whole
Are you surprised the government is asleep at the wheel? I'm not.
My whole department's long on this stuff. They call me Chicken Little. They call me Bubble Boy. A's, 0. B's, 0. Double B's, 0. Triple B's, 0. And then that happens.
What is that?
That's America's housing market. Thank you.
Fucking A, Jared.
Shut your fucking mouth.
And that, ladies and gentlemen, is exactly how bad things happen in the economy. So this is exactly why these types of crashes happen every so often, is because people forget history, and the same thing repeats itself over and over and over because of greed. And so always have your guard up, always be investing, and continue to invest during the good and bad times, because you're going to capitalize when these times are bad. Let me know what your favorite part of this video was in the comments below, and I will see you next week.